Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. First of all, Happy New Year, and I hope it's a prosperous one for all of us. The Australian dollar has continued to press higher over the last 4 weeks and now reaching a fresh high around 77.40 and posting a shooting star that does need confirmation from half of this candle, which is somewhere around 76.40, but there's still some way to go. One other aspect that's caught my eye is that there is divergence seen from the RSI on a weekly time frame. So do keep an eye on that and see where the market holds by the end of this week. If we have got a rejection from the recent shooting star and the break of 76 around 35.40, then that could give further indication to the downside. However, I still wouldn't rule out at this stage in time for the next couple of trading days that we see a rise up to around 77, 70, 75 before any bearish potential. The dollar index, which measures the greenback strength against a basket of 6 major currencies, has progressed lower and trading around about the 89 handle. This has seen the euro surge to the upside and post a fresh high around the 123 before dropping back. Keeping an eye on this support line seen roughly around 122, as a break beneath there would give around 200-point decline. It is assessed that we are a little bit weaker when it comes to the technicals, especially the MACD. So let's see how the market plays into this week. We do have the non-farm payroll number out on Friday, and also we have the Fed minutes on Wednesday, which could shed some light on how the dollar index is going to trade, maybe to a slightly bullish recovery, as it is very much oversold. Dollar yen has continued its downward trek after a knee-jerk reaction up towards 103.90. The downtrend, as you can see here from a weekly basis, continues and has done now for some time, since early June this year. Still, the market is pressuring this level of 102.80.90, and a break beneath there would give scope down towards 101.20. So do keep an eye on that. I am somewhat bearish as these technicals are breaking down. Sterling has pushed higher, and now with the EU and also the UK coming to an agreement to avoid a no deal when it comes to Brexit, the pound has found a little bit more momentum. I feel on a weekly scale that we are looking up towards 137.80 because the technicals still remain somewhat bullish. Although the ADX on the weekly is somewhat sideways, but the ADX on a daily is still holding. So I do believe that's why I'm looking for that top side, as I mentioned, at 137.80.90, reassess. Sterling yen has popped higher since it cleared the level around 140.35 to 40. Now giving room, because of the pound, for a stretch up towards 142.60.70, reassess. Gold has broken higher as the risk of further demand for safe haven due to the spike in global COVID. Therefore, could see a rise up to anywhere up to 1,960. It's quite a significant move in the last 4 trading days. So let's see if the market can actually break higher and push towards that top side of the range. And also looking at oil, well, the market is still somewhat struggling to capture this $50 handle. Let's see if it can break higher, and if so, could see a move beyond. Could see a move beyond 50 and up to about $51, $52. Well, that's a wrap for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.